I'm Mike Cruz, your host, private pilot, author of Saturday Every Day, and CEO of North Texas Wealth Management, a firm dedicated to values-based financial planning. Hi, welcome back to North Texas Wealth Management webinar insight series. Excited about our guest today. Nat Hasnat is with me. He's a lead broker from Liberty Mutual, talking all about property insurance and what clients and people should be doing when they think about protecting their assets. So, Nat, thanks for being here with me.
Thank you, Mike, for having me here and share my knowledge, and truly appreciate your opportunity to speak with your audience.
Yeah. So, we were talking about it. I think we've been trying to figure out how long we've known each other, 15, 20 years. I know you've been doing the insurance now, longer than 10 years.
Right.
And full disclosure, Nat's my insurance agent, and you've been really phenomenal and helpful for me. With the full package, and anytime I have a question, you've been very responsive. So I appreciate that. So when I'm talking to my clients about property insurance, it's probably the topic that I personally am least comfortable with. I'm not the expert. And so I always lean on you. And so kind of help us understand where do we begin when we think about protecting what we own?
Right. It is a hot topic, especially nowadays in the market. Your knowledge-wise, consumers should understand how the contracts are generated. In the state of Texas, there are 4 different ways you can write a contract for property insurance, and those are forms. Okay. Number 1 would be HOA forms. Number 2 would be HOA plus forms, then HOB, HOC, HO3, and HO5 forms. So each forms are pretty different from each other.
Okay.
And consumer has to understand what entails within these forms and how they generate it and what covers and what not, right? So there are 2 ways to do this. One is the most basic way, and other one is going to be the most comprehensive ways. Okay. The basic way of written an insurance policy is by utilizing the form HOA, Homeowners Form A, and Homeowners Form A+. Homeowners Form A would have very limited coverage settings, okay? It is a least peril policy, meaning perils are cause of loss, like fire is a peril, wind is a peril, hurricane, those things. Okay. So there are going to be 8 different perils in the state of Texas on a basic form, which is HOA form, okay? Under that particular form, if losses does not happen by this particular perils, then you're not simply covered.
Okay.
And under this particular form, when you file a claim, it also depreciates your value of the claim or the property or anything that covers within this peril, right? So if a consumer have a good knowledge and understanding of what they're buying and what they're covering, then they will know exactly what it is and what not. Okay. And whereas the other sets of policies, which is the HO3, 5, C, and B, they are open peril form. Okay. So that means that they're broader coverage, right? So those coverage will extend much broader degree than something is written, loss must happen by this. If not, you're not covered. But if it's an open to it, that means that you have more broader coverage forms. Those are also known as HO3, B, C, and 5 as an open peril setting, also known as a replacement cost coverage policies. Okay. So they're replacing, making you a whole instead of depreciating the value. So your old item would be replaced in your item. So this is basically how those policies are, in a general term, describing.
Okay. So basic levels of service, all the way to something more comprehensive. And of course, cost goes right along with that.
Right, along with that, correct.
Cheaper policy, as you get more detailed.
Right,
the higher
the more coverage you have, of course, more cost is going to be associated with that particular product line.
Yeah. So we've seen a couple different shifts in the marketplace when it comes to property insurance. One is home values went up very, very quickly. And I called you and I said,
sure,
hey, am I still covered enough if I had, a catastrophic, my house burned down, do I have enough coverage, right?
Right.
How do you handle and manage that for your policyholder?
Right. So basically, there are two ways to do this. One is to be proactive and making sure that your existing book of business, the people that you have, whether they're calling you or whether you're aggressively calling them back to making sure that they're properly covered, right? Mm-hmm. And the way that you do so is that whenever you open up that particular property, you basically ask specific questions in regards to the underwriting, how the product is developed, especially how the home is built and so on. So if you make any changes within your house, right, then you have to upgrade that changes. Sometimes people renovate their properties, right? So therefore, if you were underwriting 5 years ago a basic builder grade bathrooms, now they're customly built. So therefore, that needs to be inputted accurately in the underwriting manual. Then your property value, the cost of entirety of rebuilding cost, which is the replacement cost, will go higher in that degree, right? So you have to ask the right questions from the beginning. If a client comes to you and they're asking you, hey, I have my property value at that level, but you are replacing at that level. So everything has to be very, very truly, navigated through underwriting manual. And then you will come up with your rebuild cost. Now, typically, consumers do make major mistakes out there, and they're always thinking more valuation of the property might be higher premium, which is true. But then again, if there's a total loss and you are devaluing your property, what percentage of your property that you do not want to rebuild, right?
Right.
So that is the most important thing, in my opinion, especially nowadays. Inflation, cost of doing business, material goods, these are all going up. Right. So therefore, your property valuation has to be up in that level. Now, going back to HOA policy versus HO3 policies, some of those policies have inflation guard already included at a minimum 10% year over year, which you'll see that. But then again, the 10% inflation where we know that market inflation is significantly higher, that does not add up. So you have to be, as a consumer overall, proactively, reaching out to your advisors to make sure that everything is done accurately.
Do you have enough coverage, right?
Right. Do you have enough coverage?
And then it's important to realize that you're not insuring the land.
Correct.
So it's really,
that is another equation.
You exclude that, and it's really just what would it cost for me to rebuild that.
Right.
And I think there's common misconception too that, in a catastrophic loss where your home burned down or some, terrible scenario, you're not insuring the land. What if you choose not to rebuild and you're like, this is my opportunity to take a check from the insurance company and move and just leave it and walk away? I think people in the back of their mind think that's an option.
Right. Okay. There's two answers to it. Okay. Either you can rebuild if this is a replacement cost coverage policy. Okay. And most likely the special form HO3, HOB, they will allow you to rebuild here, or you can take the money and rebuild somewhere else. Right. But keep in mind, insurance, you can never gain from it, right? That's just protected by the law and so on. So they're going to rebuild you regardless where you want to rebuild, right? So therefore, you have option in certain policy terms that, okay, I want to I have a really bad experience in this particular land. It's a wildfire, destroyed my family, and I don't want to do this in here.
Right.
Okay?
Right.
I want to do it somewhere else. Of course, the land, then you have to purchase yourself, and then the adjusters and claims process will take place, and they will then determine, where you want to rebuild.
That's because you're rebuilding that they'll go ahead and pay for that.
Correct.
But if you don't rebuild,
and
you really don't. You don't really get that coverage.
Right? Yes, you want to make sure that you have compliant with the contract that is being generated for you from day one.
Yeah.
So, and all the exclusion, all the coverage setting, how this is going to be in a typical insurance contract is about 65 pages, right?
Yeah.
So, and it has all the rules and regulations included in there for you.
So, sticking with property insurance, I think Texans are walking into, hey, it's fall, we're in cooler weather, but we also know that colder weather's coming. And, winters, think of the electrical grid. And what if we walk into a scenario again where pipes are freezing and we have water damage? It's, that's nerve-wracking. So how do we know what our policy would cover? What do you recommend to Texans that say, I want to sleep at night, I'm willing to pay for a policy to cover that frozen pipe? What are the options?
Right. This is a really in a scenario where we're anticipating within the insurance industry change of environment, regardless of what may be your political belief or not. It is there, right? So more harsher winter, more harsher drought, these are always, act of God, which no one has control over. So we're anticipating more, crazier weather pattern to take place. And freeze weather is one of those line item. And as you can see, we had this in 2019, then 2021, and then it's a continuous pattern of going into that direction. And if a power grid goes out, obviously, then you know that it's a pretty serious matter. And those serious matter, then you have to obtain a policy that freeze weather burst pipe must be covered.
Okay.
Now, again, going back to HOA policy, HO plus policy, and then HOBC3, like the most comprehensive policies will provide you freeze weather burst pipe coverages. However, you must read, how the contract is generated, whether they cover or not. Some of the companies' policies, within this industry may have exclusion if you cannot maintain the heat within the house. And a freeze weather burst pipe to take place. We're not going to cover you.
So in a scenario where your pipe freezes, does that coverage just cover repairing the pipe? But what about the water damage?
Water damage.
It ruins your wood floor. Is that covered or is it not covered?
Right, yes. So if your policy provides freeze weather burst pipe, the water is the cause of loss. And the freeze weather is also the cause of loss, right? And then you have the water damage, right? So water damage itself will be covered. Right? Now, in a particular policy, they may dictate, I may not cover your broken pipes, right? So that particular pipe will not be covered. So that's why it's very important to read your contract and see how it is generated, right? And most importantly, you have to read whether you may maintain the heat or you may not have to maintain the heat within the household to be covered. So some companies, some policies out there dictate homeowners must maintain the heat. Now, if heat goes out and you cannot maintain the heat and then pipe burst open, and if that clause is there, then
it's excluded.
You will be excluded, right? And
so they're responsible for the loss of the insurance.
Right, for the insurance. And that's why it is most important thing to read contract, understand what it is and what not. And most likely the basic coverage peril forms, you are completely on your own kind of situation. So it is important in your environment where you live, understand what may go wrong.
Okay. Yeah, makes sense. And then what about auto policies? So if we kind of switch from property to auto, and then, I think one of the questions is, should I shop around for homeowners insurance and then go shop around for auto policy, or should I work with the same company? What are the advantages?
Right. I mean, there are always going to be a multi-policy discount that is applied to your vice versa, right? It's better to do business with the same company, right? Nowadays, often the case, insurance companies dictating, I cannot continue your business unless I have both line of the business, right? Some companies completely opting out, writing homeowners policies if I don't get multi-policies, right? So therefore, you have to then understand what the cost savings is there, right? So if it's a significant amount of savings where you take the auto somewhere else or home somewhere else and leave here and there, but normally, typically, it is not. If you combine everything together, you get the multi-policy discount. That particular discount varies from 20 to 10% range. So it's a significant amount of money that a consumer can save.
Yeah. So the typical driver that's driving around, and let's face it, drivers are more distracted than ever.
Correct.
Half the people are on their cell phones while we're driving. You know, I had somebody run into me while I was parked, you know. And so in those scenarios, what are the coverages that people need to have in place to be adequately protected?
Sure. In my typical belief, it depends on the individual's net worth, right? You know, so if a person has $1 million set aside and they're affluent in the society, and even regardless of that, you want to make sure that you're being prudent. You want to cover somebody else's injury at a greater level, and that makes you a prudent individual in a society. So a $250,500 on the split limit liability is really a recommended for, you know, certain demographic of people. $100,300 is an ideal situation for an average setting. You know,
what does that mean? $100,300.
Correct. So the liability limit is what we all must have in order to drive outside, right? That is a law that we have. We drive, we have to have liability coverage. So liability coverage, you have a certain limits, right? You have 30, 60, 50, 100, 100, 300, 250, 500 goes all the way to million, and if you need more coverage. So when I say 30/60, that is the state minimum limit a person must have in order to drive in the road.
So what is that? So that first number, what is that?
The first number would be each person accident that an individual go out there and physically injure somebody.
Okay.
Like say you're driving, you hit another person's car and somebody's neck is broken. In that case, your insurance company for that particular individual will be responsible on your behalf, $30,000.
So minimum is
$30.
Okay.
And then $60,000 would be their aggregate limit of liability. Let's say in that particular car they have 4 people, 5 people, or you are in a chain accident that everybody's hurt and your fault. Then your insurance company on your behalf, they will pay out for somebody else's physical injury that you caused up to that max amount of 60.
Okay.
Now, going back to the question of is 30, 60 is enough? Typically, it is not. You know, just think about it. My neck is worth more than $30,000, right? So, and that is the reason.
And even the cars.
And not even the car is right. So,
$100,000 cars driving around.
Correct. Yeah. So, and that is how the limits are set up. Now, keep in mind, given the environment that we're in an insurance industry, and all insurance companies looking for the perfect risk, the good risk people, right? Okay. And those good risk people are generated also by certain factors. And 100, 300, 250, 500, 30, 60, those are their determination how good risk you are. Okay. So if an individuals are out there driving with 30, 60, 25, typically on an insurance company's eyes, they're judging them at a high risk category of portfolio. So normally they may think they're saving money by buying those less coverage amount, although they're not protecting well for themselves, not to somebody else. In the meantime, they're more because they're high risk of a portfolio. So it's always recommended to have a little bit better coverage than the state minimum.
So was 100, 300.
100, 300 to 250, 500. And if, of course, an individual has a high net worth, to protect their, risk factor, if they have underage driver within their household, they may have a swimming pool and so on, then the additional liability of an umbrella policy kicks in to take care of them in a higher degree.
So it's one of our questions today from a client wanted to make sure that we cover that.
Sure.
So an umbrella policy sits on top of your current insurance. So let's say you have your homeowner's insurance, you have your auto policy.
Right.
Talk to me about, do I need an umbrella? What does it do? How much should I have?
Right. So not everybody needs an umbrella, but as an insurance agent, everybody should be covered, right? So the umbrella policy determination comes from the typical individual net worth, right? And the type of risk that they possess in order to protect their assets, right?
Yeah.
So if an individual have, a million, $500,000, 2 million, 3 million, that category of net worth, then they have underage driver driving their vehicles, right? And they may have a swimming pool behind their, house and so on. So if that is the case, then the swimming pool, if somebody comes in and drowns, then it becomes a significant liability for them, right? And an underage driver goes out there and have an accident, and all of a sudden a lawyer finds out that you also have $1 million set aside for yourself and asset-wise. So then it becomes a risk factor for that individual to determine, whether I should be covered more or not.
Okay.
And my suggestion is always to protect your asset at a higher degree, right? So therefore, that umbrella policy is recommended for those individuals that possess a higher risk,
higher net worth,
and so on.
So it typically kind of starts, you can get it for whatever amount, but typically around $1 million that sits on top of your existing policy.
Correct, yeah. And then the, going back to the question and how much umbrella policy that an individual should acquire, right? Typical insurance companies could underwrite over $5 million with vigorous underwriting. $2 million is very easy to underwrite it. $3 million, that's when the approval, estate management kicks in with an insurance company to get it approved. But more you have...
kind of under $3 million.
Under $3 million is very easy to do, less paperwork and so on. But then again, you also have to understand more coverage you have, that may bullseye kind of situation that may bring you more hassle to you, right? So it is a discretionary matter for individual with their advisor to come across and what is there and what not, and how they're protected, of course, in your environment. The trust and everything should be adequately in place for those individuals.
So I've heard the scenario where, let's say you're out golfing, but not great. You slice and that ball hits something, damages, hurts somebody. An umbrella policy could cover you.
It could. It depends on how that particular policy is written, right? And typically any personal liability that you have come across, and of course the golf course will have their own master policy in that case to see how their policy is applied. So then it becomes primary, secondary kind of thing with the golf course policies to yours and so on.
Yeah, I always thought that was an interesting scenario because it's kind of outside the scope of thinking about what if I'm on my property or if I'm in my car.
Right.
There's outside coverage that could potentially be covered for just general liability.
General liability, right?
Yeah. Yeah, really good. So, the other thing that I think is missed is sometimes, we do our due diligence.
Right.
We're like, all right, my policy is good. I've protected myself. I have an umbrella and I checked all the boxes. But then I realize I'm parked, somebody runs into me, and they're underinsured or they have no insurance, right?
That happened to me personally a year ago, and I was driving, and basically a 16-year-old kid was on the phone, rolled through in front of me, red light, and not sure exactly what happened, and just slammed right, like head-to-head collision. And thankfully, I'm still alive when we're talking. I was taken to ER and everything, ambulance ride. So in our area where we live, Collin County and that particular area, you have more younger generation from age group demographic from 16 to 20s than, parents, right? That area is developed so new. So therefore, everybody who bought home, they have babies, and now these babies are driving. So, and that is a big challenge, right? And that big challenge means that cost association of insurance for having an underage driver, is significantly higher. So the mom and dad, they're deciding to cut corner of covering less, right? So therefore, that less coverage becomes your and my part. And in my case, I have to have my insurance company take care of me because the other party did not have enough insurance. So those things are very, much happening in our area. And sadly speaking, the remedy either to get more coverage, and people are not doing so to take care of, the society in general.
So is it more coverage, or is it specific that you need to have underinsured or uninsured motorist coverage?
My suggestion is that if you're protecting somebody else with $500,000, then their neck is as good as your own neck, right? So if you break somebody else's neck and their neck is $500,000, you're thinking you have $1 million liability and everything else. Then if somebody hit you and your neck is broken and you get less coverage for yourself, that doesn't make any sense, right? And normally advisors, often the case, sees that as a cost savings for their clients. So you as a consumer then have to making sure that, you ask those questions, okay, why my uninsured motorist liability is less? Because it's protecting me.
Right. Then
I'm protecting somebody else more. So you want to make sure that coverage is always at least equal.
So I go get the insurance, $100, $300 for the car insurance, for auto insurance. I get an umbrella policy that sits on top of home and car. And then I need to make sure my uninsured motorist matches that 100, 300.
100, 300. You're making sure that you are protected adequately. Correct. Yeah. Very important. And this is a common mistake that people often make. Oh, I'll never file any claim and my neck is never going to be broken, or I'm not going to be injured. But it is more so that people are being injured. In my case, I was, personally speaking. So it is important to making sure that you review those coverages with your advisors. And if you're dealing with somebody, you're making sure that individual has good knowledge. There are various ways you can obtain insurance policies, calling 1-800 numbers and so on. But then again, you have to also understand that some of those conversation over the phone, not dealing with somebody in person or perhaps you trust, may result in a long run not in a favorable way. So that's why you have to do your diligence and research before you purchase anything.
So expert tips, mistakes, just kind of being in the industry. What other words of wisdom do you have for our listeners?
Sure. The expert tips. Auto insurance, you always making sure that you have a higher set of liability because you're being judged by insurance company what type of coverage that you have, right? If you have a better coverage, you automatically will be pre-filled with insurance company as a better risk category of people, and that does not surcharge you, right? And so it'll automatically be defaulted, right? And if you have a lower coverage also, you're going to be less protected, and meantime you're a higher risk category, and therefore they're collecting more premium from you. So that is one tip. The second thing is to make sure that uninsured, underinsured motorists are always, checked in the right way, right? Your homeowner's insurance, of course, those type of policies are available for you, HOA, B, C, 3, and 5. You want to make sure that a comprehensive policy is always a better option, even though it is costing you a little bit more money. But in a long run, an average water damage claim here in this area, especially water backup coverages, could, if it happens upstairs and sips through downstairs, dirty water, just think about it. It's 3,000 square foot home.
Terrible, yeah.
$100,000 worth of fixes right there. And if you do not have that coverage, or if you have a limited coverage, then you have to tap your savings, and which could have been avoided very simply and easily, right? With a little bit better policy. So those things are very important for clients to making sure that they review with their advisors and the person that they trust. And typically, if you ask like 10, 15 questions, do I have this coverage? What is the limit and how they apply? All this, conversation that we have taking place here, if they go through those, basic Q&A, then they will realize that how they're protected. And then that becomes, okay, how much money can I afford to buy my policy through and whatnot.
Yeah. And I think as, their financial planner, one of the things that we can help them do is identify which of the assets that they can be sued for.
Correct.
And IRAs are protected from lawsuit.
Sure.
And so sometimes they don't really realize the exposure, but those joint accounts, the bank assets, sometimes they have second properties, things
Sure.
like that risk. So just identifying, what is my liability? And then going back and looking at the coverage is what we recommend.
Right.
And
going back to that particular topic, regardless if they can, get those money from you or not, they're protected, they're in trust, they're in IRA, Roth, or any of that cannot be touched. But think about it, going through a hassle of a deposition and a lawyer's lawsuit, listing of the asset and all those things, it becomes even a hassle, right? So that is the reason that you do not want to cross the gray line. You walk the fine line, that's fine, no problem. Just to understand, having a little bit of better protection in place is always the right thing to do.
Yeah. Well, thank you for the expert tips. So Nat, if someone wants to contact you with more questions, where can they find you?
You can definitely look me up, Liberty Mutual webpage. My name is Nat Hasnat. And of course, I will give you my contact information,
put it on
put it on a link, and that should take care of it. And I truly appreciate your having me here today. Thank you so much for sharing my little knowledge with you to enhance your consumers' point of view of insurance.
Absolutely. So thanks for tuning in today. I think it's a wealth of information. It's a great time to take out those policies, look at your property values, make sure you have adequate coverage so you can avoid all those surprises that we don't want. Thanks for tuning in for this webinar. Stay tuned for upcoming Medicaid long-term care specialist, attorney, and other topics that we find valuable. Thanks again.